So now let's move to the next part. I'll just raise this, otherwise it will be even the same. That will just take few minutes due to Azan. Meanwhile, you go through this point. Yes, Ms. Kinjal, you can ask your question. Sorry, yes, Ms. Kinjal, I have one question. So let's see. Whether distributor means amount without exempt income, and for driving the addition, we need to exclude exempt income. Yes, in the last session, this point was very clearly we discussed before interest income and after all the deductible expenses, after all the or after making all the adjustment, that the adjustment we are discussing, the 12 adjustment, sorry, the 8 that adjustment. So total 8 adjustment, under that the further adjustment. So we discuss before exempt income and after 8 adjustment, then that will be our adjusted EBITDA. Just go to the last session, you will have this slide also where we mentioned that. Hope this point is clear. Now the maximum interest can be deductible is higher of. So now we are discussing, hope this point is clear. Maximum interest, we will discuss. Here also again we mentioned the exempt income, but we previously in detail we discussed. Here we just looking for the summarized version. So we are saying the higher of the 12 million, say, so it's not, yeah, here. Higher of is 30% adjusted EBITDA or the 12 million, whichever is the higher of. So this one we have very detailed understanding. Let's move to the next. Any unused interest expenditure that can be carried forward to 10-year on FIFO basis. So what we understand previously, the interest we will first the current year interest, net interest after applying the formula we will deduct, and if still we have the some unutilized gap that we can look to the previous year, if any amount of interest in while looking into the previous year, we have to see the first year. Maybe if we are looking in end of 2025, so maybe our tax period is started in 2023. So first we will see any amount of the unutilized interest is carried forward from 23. We use that. Then if any amount of carry forward from 24, then we utilize that. So in this way, we will utilize. Why? Because each year end, the carry forward unutilized interest will be for 10-year carry forward. It's good for us if we utilize the first year, that is the leftover, then the next year, then next year. So we can avoid the forfeiting of the unutilized amount of the interest. Hope this point also clear. Let's move to the next. The general interest rule will not apply on historical financial liabilities taken on or prior to 9 December 2022. Hope this point also will be clear. We have the detailed discussion. I appreciate if quickly you guys respond on that. Now I'm going to give you again the summarized version of the historical financial loan. No interest rule capping on qualifying infrastructure project. Okay, this point, the qualifying infrastructure project. Okay, this also we have to understand. What is the first point while looking to the qualifying infrastructure project? It is exclusively for the public benefit of the state, like the UAE. State, the word is used for the UAE because we are in UAE, so the word the use state is only in exclusively for the public benefit of the UAE. And the next, it is exclusively for the purpose of providing transportation, utilities, education, healthcare, or any other service within the state as may be specified by the ministers. So this is the second condition while reviewing the qualifying infrastructure project terms and condition. Now the next point is asset may not be disposed of at the discretion of the relevant qualifying infrastructure project person. Because for sure, if you're saying there are UE roads, these are the qualifying projects. So anybody come and say, okay, now almost 10 years, so let's sail out these roads. He cannot give the decision. He cannot take the decision. He cannot dictate on that, because this is for the public benefit. This is the state owned. So such things like metro, we are traveling to the metro. We seen the metro will stay for us. You will give the call, okay, metro, I will be reached after 10 minutes on the station. So wait for me. Metro will not wait. He have the standard timing. It will go, because such the utilities are such transports are the public benefit transport. They are not under the control of any individual. They will go as per the standard timing and the procedure that the state already defined. Let's go to the next. The asset provided operated or maintained by the project should be last and be expected to the last not less than 10 years or any other period as specified by the ministers. This is another condition where we are seeing that if the asset is less than 10 years, the life of the asset is less than 10 years, so maybe this is not the public benefit interest. Public benefit, the asset or the project or the qualifying infrastructure. So what we understand normally is more than 10 years of such asset life. Let's move to the next. All the asset must be situated in the state territory, like all the asset must be inside UAE. All the interest income and the interest expenditure must be arise in the state. Like now, okay, if we doing such project, so how come the interest expense will be interest income will be there? Anyone give the insight? What will be the situation if the interest income will be arise? Because such project normally they take the loan from the financial institution, that is a subsidized loan for such from the government institution or private institution, and they're paying the interest expense to them. How come they will have the interest income from that? Anyone would like to answer on that? Yes, Fawad Aziz, thank you. Yeah, maybe they have the loan approved in one shot up to certain amount, but they are utilizing on the rolling basis. Yes, Ms. Kinjal, yeah, the same. So if they already take the approval on the subsidized loan, and then they are, the utilizing based on the project progress. So maybe excess amount they have some deposit or some kind of, so they are generating the interest income from there also. Let's move to the next. It satisfies any other condition that may be prescribed by the minister. These are the standard terms and conditions that as of today we know based on the city law. Apart from that, in future or any other special condition based on the special project, while they announcing the project, any special condition part of the project is there, so that's subject to the satisfaction. Next is a text group consideration. We will see the next text group consideration, how it will work. Okay, this point is we covered previously, and now I'm just gonna see that. Okay, this was the missing point for us. The other we already gone through. Okay, this example we seen previously or no, because already we seen, but this is one of the easy example. You guys want to quickly see or this example also. interest capping rule, general interest capping rule, excessive debt financing and reducing taxable income. Now here the first condition, then this is the first condition. If the net interest is up to 12 million, so quickly we'll go through that. If 12 million, so what we will do? If interest expense is up to 12 million, either we will do the calculation or straightforward will, without calculation, we will just whatever the interest amount we will deduct. Yeah. So here we will not deduct. Now we see the net interest is a 8 million, EBITDA is a 10 million, and all the interest expense without deduction we will, because as long as it's 8 million, we will not do any deduction. Now here the example is the interest expense is above 12 million. If it's above 12 million, net interest is a 18 million, EBITDA is 100 million. How much interest expense is allowed for the city? So what will be the interest allowed? 30%. 30% of which amount? 30% of which amount? Guys, quickly. Please write the amount. Yeah, thank you. Thank you for both of these. Now the next, again the same. Next, net interest expense is 18 million, EBITDA is 15 million. How much interest is allowed for the city purpose? How much interest is allowed for city purpose? Okay, guys, let's move to the next. So here, the next, again, today we are discussing the key points. Today we are discussing the summary that previously we already understand, but now just note down key message, key points, and how it will be utilized. Because previous one, we just understand the concept, but these are the key summaries that you guys have to note down. Anyone would like to explain this point? Anyone would like to explain this? Now here we wish to understand what are the key items will fall while doing the interest capping rule. Because if we are not aware this amount is interest, so how we apply the interest capping rule? If we are not known that this amount is interest, so we may have the deducted the more expenses and we pay the less tax. So resultingly, we have the admin penalty plus the late penalty also, misappropriation penalty also. There is a 4 or 5 kind of penalties. We will go through that also. But if the reporting team will not familiar with that, this will be part of the interest or not the interest. They will follow the IFRS. So accordingly, we have to see what is the law is saying. We already understand what is city law is saying. For general interest deduction rule, interest or payment economically equivalent to the interest will be considered. Now, maybe the interest, whether mode of interest, the barter system or any form of is settled. So here we're saying economically equivalent to interest will be considered. Interest or payment economically equivalent to interest will be considered, regardless the classification and treatment under the IFRS. Deviation on the norms that tax will follow accounting under city law. Normally, we follow the IFRS. But here we are saying it may deviate. So here we are saying economically equivalent to interest will be considered. Hope this point will be understood, and you guys keep note on. Major items that fall under interest include amount incurred in connection with raising the finance, such as guarantee, fees, interest. Just now we've seen this. Important note, seems the interest recorded under IFRS 16 lease should be considered when calculating the general interest deduction limitation rule. Same goes for capitalized interest. Hope this point have detailed understanding. Again, the summarized version. Minimum safe harbor. Again, just now in the previous example, we see the 12 million net interest expenditure, interest expense minus interest income. Mr. Hamza, please, I appreciate if you avoid writing on the screen. Mr. Hamza, please look into that. I appreciate if you can avoid that. I'm not sure how you are able to write over that, but normally it should not be a appropriate way you're writing on the screen. Net interest, minimum safe harbor, we already seen. What happens if EBITDA is a negative, net interest expenditure is a non-deductible? If there is no EBITDA, so net interest expenditure is a non-deductible. Net interest expenditure attribute to the debt instrument, the terms of which are agreed. This is the same we already seen in the last slide.